our main index. But the key challenge actually is about the liquidity in the market and the ability of the market to function in the right way it should do, which is when we were teaching in the university, we are saying that the capital market or the stock exchange has a mandate for the mobilization of resources and the best allocation of resources. And the good signal or the good news, we got it back last March when we have the first IPO on the market since 2010. So it was the first IPO on the market in 4 years' time. And you are right, because we have like 3 big companies in the stock market. They're still listed. They have not been delisted, but in terms of liquidity and the trading value, they are not there actually. And in reality, what we're trying to do is to capitalize on the potential economic growth coming in the next few months and years to come. And one of them is about the mega projects. And I think we had an IPO summit back in May where the Prime Minister himself was attending that. And there's some sort of understanding that the stock exchange and the capital market will play a key role in financing these projects. So the banking sector on one side, and the complementarity between the banking sector and the non-bank financial institutions, which is the capital market and the stock exchange, are playing the key role. So how to capitalize or utilize the activities happening in the economy to take or to use the stock exchange as a way of financing. I mean, the Suez Canal was the first example in which they were relying on the banking sector to financing this mega project because of the sensitivity of the issues. But the way forward is that other mega project will have a mix of financing. So it will not be only the banking sector, it will not be only the internal financing, but it will be also financed through the capital market, whether we are talking about the equity financing or we are talking about the corporate bonds. So the good news coming is about the activities happening in the economy. So we are talking about the mega project from the government. We are talking about the public-private partnership, in which I'm sure it is not about the incentives in terms of financial incentives, in which it is there as well. But you talk about different kinds of incentives. Going public has many advantages for any company. About to making sure if you are monitoring the company, if you are a shareholder and you would like to make sure that the company is managed in the right way. So being listed in an organized exchange in which we are keen about the investors' protection, corporate governance, financial reporting, disclosure, transparency, I think it gives some sort of assurance to the shareholder that the company is managed the way it should. This is number one. Number two is about the exit strategy or exit policy. I mean, of course, it's very easy for you to exit partially or totally if you are listed compared to if you are not listed, because you have the better valuation in the market. The exit is in a very simple term. And also, even with the new tax code for the stock market, is still being listed is more competitive compared with not being listed. I mean, still the capital gain taxes outside the market for unlisted securities is around 20 to 25% according to the size of the company. However, still inside the stock market, you are talking about 10% capital gain taxes. So in reality, you have 3 very forward incentives about the exit, about the better valuation, and about the tax incentive, even with the new tax code. And of course, you have the financing tools, because it will be easier for you if you would like to find some investment opportunities, if you would like to go forward for capital increases. You will find the stock market is helping in this issue, because the liquidity will push shareholders to participate in capital increase. So this is 4 main things known for going public actually. So the incentive is there, and as you might understand, I mean, this stock market is very well open to the foreign investors. So you will be subject to any things related to the know-how from the foreign investor, from the merger and acquisition might happen in the market. So you have many different incentives to get listed in the Egyptian exchange.
Do you feel that you mentioned this, the capital gains tax, so 10% on gains on publicly listed equities. Do you feel that has had a negative effect on the performance of the market, on the sentiment towards the market?
In a very short term. I mean, I still remember the reaction of the market at that time when we were discussing the code itself. I think one of these days we have to close the market for 30 minutes because the main index, EGX 100, went down 5%. But if you look to the figures after that, I think at that time the main index Egypt 30 was something around 820, went down to 700 something. Now we're talking about 9,600. So actually are like 20% up compared with the time when we were talking about the tax for the capital gains. But what investors are keen about is that about the economic policies that will take place. And you find that the government was keen about tackling issues related to subsidy reform, things related to tax reform, things related to energy reform. And I think these are the three main pillars investors will keen more than about the tax issue. And of course, added to that about the investment strategy for the government to restore confidence, not only for the foreign investor, but also for the domestic investors.
Well,
and this is a very important message. So I can tell you about it, that the worst is over about the tax issue. And people are now talking about the looking forward. And you know, the stock market is reading the futures, and the valuation is about the future, not about the history. And I guess that people are still optimistic about the economic landscaping that might take place in Egypt in the next 3 to 5 years.
So what is the, okay, well let's stay with that. What's the forward PE of the market? What is the market saying about what it thinks the future is?
I mean, the market says, you can see that in the, as you rightly mentioned, about the progress of our main index, about the return for investment. I think from the beginning of the year to date, I think our main index is something like up 38%, which is ranked number 2nd in the world, actually. But this gives you that how people are optimistic about reading the future. Remember that in the last 3 years, the Egyptian economy did not grow by more than 1.8 to 2%, which is a very bad news for the Egyptian economy. As I was mentioning, it might be a welcome news in Japan, could be celebrating news in Europe, about 2%, but definitely it's a bad news for Egypt. Bad news for Egypt because if you look to the Egyptian economy, we are talking about an unemployment rate of 13 to 14%. And as an economist, before being a chairman of the stock market, I mean, is to controlling the unemployment and bring them down, and to be able to have a job creation, given the fact that you are talking about 800,000 to 900,000 newcomers to the job market every year. You would need a real growth rate between 6 to 7%.
But I mean, is the expectation, I suppose what I'm saying, and I know it's it's not entirely for you to comment on this, but you know, you're not a trader, you're the chairman of the exchange, but maybe you'll have a more balanced view. Have we priced in the optimism, or do you think there's more optimism to come?
About the stock prices?
Yeah. Well, I mean, you know, in the end, if you're saying, I mean, your contention and the
but
contention...
But you rightly mentioned, I have the legality to comment or not, but because my position as a chairman, I cannot talk about
You can't talk about that.
But what I talk about the medium to long-term view. And listen, something I did learn being a chairman, and even when I was vice chairman, I always was against any chairman to come and talk about the pricing of the market and about what is the index is heading for and what is the correction would happen.
No, but I mean,
this is not just job of the chairman of the stock market.
It's my job to ask you that question, even if you can't answer.
But because I said that you should not thank the chairman if the prices went up, and then to start to talk about him badly if the prices went down. I'm not responsible about goes up and down.
Absolutely.
But what I'm responsible about managing the stock exchange in a very accurate manner. And you rightly mentioned about the pricing, but what I can say to you is that medium to long term, I'm myself cautiously optimistic. I'm cautiously optimistic because I understand that the Egyptian economy has the potential to grow. It's a very well diversified economy. You know that Egypt is the biggest market in the MENA region in terms of population, around 85 to 90 million. I mean, it is very much driven by domestic demand, and this is why during the transitional period in the last 3 years, we were growing. But if you look to other countries' experience in the revolution, they were growing negatively, but we were growing positively because of the strong domestic demand. So I'm optimistic about the diversification of the economy and about if we put the prudential right economic policies in place, in which we did start really, about the three main issues: subsidy, tax reform, energy reform, and you need to improve your investment. climate, and I'm sure that the result will be very soon. Not about 6-7% in a couple of years, but in 3 to 5 years' time, you can reach the same level you have been before.
Yeah. No, I think, I mean, we talked a lot yesterday about growth rates and I think the relatively realistic predictions for growth. I mean, no one is predicting 10%, 12%, it's 5-6%. Okay, that's a good rate. But, from a market perspective, I mean, one of the ways that investors, and I'm talking about professional investors rather than retail investors, measure there are lots of different ways you measure the sentiment of a market. What's it saying about the future? One is the price-earnings ratio, the level of the index, the growth. But, in other markets, you look at various derivatives, forwards, options, all those sort of things. Of course, credit derivatives, are saying things about the market. Do you feel that the Egyptian market needs more products? Derivatives, ETFs, different types of things to sort of move it to the next level?
Yeah, definitely. We need a different asset classes. I mean, this market is equity-driven market. And we are, if you look to other sophisticated market, you will find that the fixed income is about 60% of the market. So, I mean, it's a 60% fixed income, 40% equity. But this market is 9+% is equity-driven. And I think we have long meetings, and there's a common understanding among key players in the Central Bank of Egypt, the Egyptian Exchange, the Egyptian Financial Regulatory Authority, the primary dealers, the Minister of Finance, that it should be a way to find the treasury bonds are traded in the market. You understand that the domestic debt is $1 trillion and something, and if you look into the percentage between treasury bonds and treasury bills, it's a 25 to 80, 75. So you're talking about $250 billion Egyptian pound in terms of long-term debts, which is a treasury bonds.
Yeah, there is a good stock.
Yeah, it's a very good stock. And if you're taking only 10% of that to be floated in the market, this will provide some sort of balance and other asset classes for investors to access the market. So instead of having 100% of the equity market, you would have 70-30, you have 80-20, you have 90-10, whatsoever. And this has been like in 1995, we have something called housing bonds. And it was always part of our portfolio when we were investing in the stock market. The other thing, as you mentioned, is about the ETF. I guess there was some legal issues about changing the name of the ETF itself, because it did take the EGX name 30, and I did ask them to change it actually. So they are in the process of doing that. But my understanding is that they will come to the stock exchange rightly after the Eid, after the feast. So we will have, my expectation, the first listed and trading for ETF before the year end. So this is a different asset class. It's still driven by equity.
Of course.
But it's a different asset class.
Yeah, absolutely.
The third issue you mentioned about the derivative, yes, it's a very ambitious plan for not for me as a chairman, but for the EGX board itself. And I think one element of our 4-year strategic plan a year ago is to try to find a visibility study whether or not we have to go for a derivative, even to start with a very simple future contracts. We have been in talk with 3-4 stock exchanges around the globe, from Asia, from Europe, and I'm going to speak very soon with a very important stock exchange to be honest, it's a CME, which is happening the weekend, about the potentiality of having their other partners up for the derivative. But this is a long-term plan. It will not take before 2 to 3 years. Just to
absolutely. I'm not even asking you to give a date. But what I don't quite understand is what is the reluctance? I mean, derivatives.
No, it's not a reluctance.
Warren Buffett called them, financial weapons of mass destruction. But he was referring to a specific asset class. It does appear. I mean, we've talked about derivatives on the EGX for the last decade. It does appear that there is some sort of reluctance or anxiety about derivatives?
No, it's not a reluctance. Actually, we were very close to do that prior to the global financial crisis in 2008. We were about to sign with one of the exchanges, and then we have the global financial crisis. And everybody was reluctant talking about the derivative short selling, all these issues. And then when things to stabilize around the globe, we have the revolution in 2011. And then, of course, you understand in the last 3 years, nobody could talk about developing the market further, about adding derivative while we were...
No, there were a few other things on
that. Now we are enjoying a big level of stability, in our security level, in our political landscape, and even in our economic policies. And I think this could be the right time. But listen, we have to be honest that the Egyptian exchange or any entity here inside Egypt, they will not be able to create a derivative by own self. We need to get the know-how from outside. And the best thing to get is from the other exchanges. They have this experience. But they are waiting to see the right time to go for a partnership. Because I'm not asking for a know-how in terms of the trading system or clearing and settlement system, but I'm asking for a joint venture stock exchange between the EGX, some key investment banks, and one of the leading exchanges in this field to be partners in terms of ownership and know-how, and not only in terms of know-how. But it does take time.
Absolutely. Well, that was my next question. Business, which it is a business now in the world, is consolidating into a number of leading groups. And there's a competition between those groups, and they're signing deals and partnerships with exchanges in the region. Do you see EGX as signing a partnership with someone in the next 12 to 18 months? I mean, do you think is that very much a strategy for you?
Which term of partnership? If a partnership for dilution, no. Because from my own experience, from my talking with the government, I mean, everybody understanding or consider the EGX as a quote-unquote national pride. So it is not something for privatization. It's not in the table. What you can do is that if you are looking for a derivative exchange, this could be in terms of a joint venture in which the EGX will have a share, could be a majority, 51% and other way. But EGX itself is not heading to the same model that's happening in Dubai, for example, Nasdaq Dubai, or Euronext with Qatar, with Doha, for example. And it was not a good experience. It was not a successful one. And you know that Euronext sold back to Qatar Stock Exchange, and Nasdaq is doing the same for Dubai. But let me tell you something. Although we are fully owned by the government, but the only thing that the government intervene is about appointing the chairman and the vice chairman. But the board is elected. The way we are managing the stock market is with a private sector mentality. So the only thing is that there is an official appointment for the key two position, chairman and vice chairman. Other of that, it's like a privately managed exchange.
I mean, the exchange business globally is becoming really driven by three things. Obviously, the traditional business of being an exchange, of trading and all of that, about technology.
Right.
And having the right technology platform to allow DMA, direct market access, trading, all of that, and indices. I mean, if you look at the London Stock Exchange, most of its business now, and its growth business, which is why it's acquiring Russell, is in indices. Do you think that the EGX can remain competitive without having some serious link up? And I mean, privatization, often people think of it meaning that 100% of the company is acquired by somebody else. But if you look at the, say, Borsa Istanbul model, where there is a strategic stake, so there's skin in the game from their partner, but it is still, a Turkish entity and will remain so. And they have no, they don't think of it as privatization. They think of it as, having a partner. But I would argue that between 3 and 5 years from now, if EGX is going to remain competitive, it's got to have some, heavyweight global partner.
Yeah, but in terms of having a heavyweight global partner, it does not mean it should be with the cash and spot market, which is the EGX.
No.
But as I mentioned, it could be with when we are thinking about creating a joint venture exchange. For example, let me tell you something. I mean, one of the plans is that if the second tier market, the SMEs, which is NILEX, is able to be independent, then you spin it in a different company, spin off in a different company, and then you can have a partner with you. And I was just mentioning a few minutes ago is about the derivative exchange. The plan is to have a partner from a very well-known global exchange in terms of derivative. This is what we can talk about the partnership. But I do not think in the 3 to 5 years, it is on the table. that the EGX itself, the cash and spot market, might have a partnership in terms of selling a stake. This is not on the table.
No, you don't.
But at least, as we speak now, it could be changed later. But I mean, and actually these things has been discussed back in 2008. And still the position of the government did not change, even with the changing all the things. I mean, as I was mentioning, just they consider like a national pride. But you were mentioning three things. It's about, one of them is about the technology. And this is what we did. When I was in New York last Friday, when we did ring the bell in NASDAQ, we did sign an extra 5 years contract with NASDAQ because we are using their trading system, which is extreme. And the good news is that the extreme we have it, the license we have it, is that for the spot market as well as for the derivative. And now what we are looking.
But the new things, you will be pursuing partnerships with leaders in each of the.
Definitely.
Okay, good. Now I have two more questions before we have to go, and I know you have a flight, so I don't want to keep you. Let's start with this. Something we talked about a lot yesterday was for want of a better expression, the SME sector. And developing the small and particularly the medium-sized enterprises within Egypt. What's the role, do you think, of EGX in encouraging the development of startups, medium-sized companies, growth companies, as they're called by the financial
community? We did start this initiative several years ago.
You did indeed.
We have NILEX, we have now around 26 listed companies. It is not at the level we wanted to see, but at least given the circumstance, as I was mentioning, NILEX was not that lucky, because when we start initiating NILEX, we have the global financial crisis, and then we have the revolution, and then we have a second wave of the revolution. So it was really difficult, but again, if you look to the figures and number, it's a little bit encouraging, because I have the paid capital of the listed companies is something like 270 million. But you will be surprised to know that the capital increases from these listed companies is around 58 million. So in a very simple calculation is more than 25%, or around, sorry, it's more than 20% of the paid up capital listed in the market is financed through the stock market. And if you make a comparison between NILEX and the main market, you will not find that the capital increase in the main. For example, the capital increase in the main market is around 10 billion Egyptian pound this year, and this will be less than the 20% for NILEX. Second thing, if you look even to the turnover ratio, I mean, I have a market cap of NILEX is around 900 to 1 billion Egyptian pound. But the daily average turnover is around, now is going down, so now we're talking about 2 million to 2.5 million, but in the good days it was 4, 5, 6 million. So if we calculate that for the entire year, it could be approaching 200 million, which is around it will be around 4 to 500 million, which will be 50% the turnover ratio. While the main market, the turnover ratio is around 35 to 40%. So still we are doing good, but I'm expecting that when things are stabilizing, the NILEX will have a different direction. And this is what we can support, is that we are helping them in getting listed in the stock market. We have many initiatives, whether with the general investment.
Is there a pipeline? I mean, do you see? Actually, you're talking to companies that are not currently listed,
right?
Who might be listing.
Actually, last week we did list a company with 26.5 million Egyptian pound in NILEX. The week before we did list a company with 10 million. We have 3 companies coming in the buyer band. Actually, the listing in NILEX is much more the listing in the main market. But again, we need to understand the economic situation, that we are coming from a revolution. We are coming from 3 bad years in terms of
absolutely.
But the potential is there. And of course, the other government entities, they have something to do. The businessmen association as well. So we are trying to have a collective actions of how to make the SMEs drive the economy as they are participating.
But if you say that, in the last 2 weeks there have been 2 issues, you've got a pipeline of whatever. I mean, that's a positive sign.
Absolutely.
What I'm trying to do is to kind of drill down and say, we've heard lots of positive sentiment over the last 24 hours, which is terrific and very exciting. But it's a little bit where the rubber hits the road, and that's where you are.
Again,
which is
you need to get things materialized on the ground.
Absolutely.
I mean, good intention is welcome. Optimistic view is welcome, but you would need, by the end of the day, in which I'm expecting to have a more bold and aggressive actions in terms of having a master plan framework for the economic policies in the coming period.
My final question is a sort of wider regional question. I mean, the big story of next year in the regional markets is Tadawul opening up. Tadawul, the Saudi exchange, opening up to QIIs, qualified international institutional investors. And that is the £800 gorilla in the regional markets. I mean, it
reflects the size of the Saudi economy.
Well, absolutely. Yeah. I mean, it's a great thing. I mean, we work with Tadawul. We're tremendously excited about the opportunities. But the traditionally, obviously, Egypt has been the main player. Dubai goes up and down. It's all tremendous and all that. But it is slightly a speculative market, and it's very domestically driven. The only exchange within the region that has international weight was EGX. It's an emerging market, not a frontier market. All that sort of thing. It's a proper 100-year-old. 105-year-old, is that right now?
1881.
Yeah, so I'm not going to do the math. 130 years old, there we are, very good. Gosh, doesn't time fly? But bringing in Tadawul suddenly changes the game in terms of regional exchange. Do you think it's a positive thing for EGX, that there's going to be more international view of this region, or do you think capital might flow
I'm not sure about it, because Saudi kept talking about opening the market for foreign investors for years, and when they did it, if you look to the terms and conditions, that the minimum is about 11 billion Saudi riyal. So the minimum as a foreign investor. So actually, they opened the market for foreign investors, but they did not open. In reality, because this is the minimum access to the market is to be 11 billion, which is a very big number. And this would be for a limited number of foreign investors. So in reality, when some people were talking whether this will have an impact on the Egyptian market, whether positively or negatively, I don't think so, because EGX is different. Not because of EGX, but because of the environment we have. I mean, it's the most open market. Our rules and the regulation, even with all criticism we take, in terms of disclosure, transparency, corporate governance, investor protections. I mean, we are completely in a different situation compared with many countries. Yeah. So in reality, foreign investors, they are appreciating that. And when they are entering the market, one of them is about the legalization in the market, about the legal framework, about the rules and the regulation, and about how open the market is and how well diversified the market is. I mean, in Saudi and in Emirates and in Qatar, very few listed companies, and they are very highly concentrated. Here, at least I remember, we have 12 sectoral industries. It's a very well diversified market, and I think this is what encouraging foreign investors to be more participating in the region.
So, I mean, in your opinion, it's not a zero-sum game. I mean, Saudi can do Saudi.
Right.
It's not going to sort of have the enormous, sort of sucking sound as all the money goes out of Egypt into Saudi Arabia. That money, you have Egypt money.
And you have seen that even when Morgan Stanley decided to having Dubai, Emirates, and Qatar to be part of the emerging market index, I did not see that this have a bad or a negative impact on the foreign participation.
It just means more capital is allocated.
Yeah, I mean, it gives more positive view for the entire region, for the entire MENA region. So I think this will have a spillover effect, that other investors that they will go to Dubai and Qatar, they might think about Egypt if they were not in Egypt before. So it will have an overall positive implication.
Well, that's a very good note, I think, on which to end. Mohammed, thank you very much for being with us again this year. I hope to see you later on in the year, maybe in London or something like that. Yeah. Thank you very much. Have a good trip. Thank you. Please join me in thanking Mohammed. They are a little bit of our enemy, and that we're always pressed against the wall for time. But today, for one reason or another, we have time, which is fantastic, because that gives us a little more time to talk to our next interviewee, who is Richard Shediak, who is Senior Partner and Managing Director for the Middle East for Strategy and, is that how I say it?
Yes.
It is. Richard, can we just sort of start with the who is Strategy and, because now I know who you are, but it's a relatively new name, but for an institution that has been around for many years. So why don't you start talking about who you are and where you come from, and then we'll move on to the topics of the conversation.
Sure, I think that would be helpful. Thanks, and good morning, everyone. Well, Strategy and is a new brand, but the institution behind it is more than 100 years old. So we were formerly Booz & Company, and we were recently acquired by PwC and set up as a separate line of business. And due to a number of reasons, we had to actually rebrand, and Strategy and is our new brand name. It has been a pretty controversial name. Some find it very interesting. Others say strategy and what?
That was going to be my next question. Actually.
Exactly. So strategy and what? So obviously we have an answer to all that, but there you go. I mean, it's a new phase on the back of a very long history.
So I mean, let's. Booz & Company is a tremendously well-known and respected brand, but just refresh our memories as to what you actually do. I mean, what is the company's raison d'être?
Sure. So we're a global strategy consulting firm, management consulting firm, and we work across basically all verticals, so all industries. And we work with private sector organizations as well as public sector organizations. So we work with the top 500 companies as well as most governments around the world. We have offices in more than 50 countries, so pretty global in terms of organization. We have a very strong presence in the Middle East. We work in 15 countries across the region. I am now the managing director for the Middle East, and I have spent the past 10 years of my career focusing mostly on public sector work. So working with governments to improve, if you will, a number of areas such as governance, such as privatization, but very importantly, what we are dealing with today here in Egypt. So economic reform, socio-economic reform. How can we help governments around the region improve their overall economy?
So let's come to Egypt. I mean, you are working here. You're involved with a lot of the things that we discussed yesterday. So what are you doing here? What's the role of you and your firm in Egypt?
Sure. Yeah. So I wasn't here yesterday, so I probably missed some interesting discussion.
I can guess what
happened. I looked at the agenda. Yeah, absolutely. Look, we were retained by the Egyptian government to support the development of an economic recovery plan. So that's kind of the high level, if you will, statement. It was a very interesting, obviously, piece of work whereby we looked at the overall Egyptian economy, focusing not only on the economy, but also on the social side of things. Because one of the key areas that the government was looking to focus on is how to improve the life of the average Egyptian citizen. So that's kind of the overall umbrella, if you will, for the work.
I mean, let's stick with the last sentence that you said.
Yes.
Now, I mean, traditionally, management consultancy, strategy, it's all about quantifiable deliverables, and I mean, that's what when we as Euromoney, hire somebody like you, we're always saying, what is the thing? Give me a number.
Right.
How do you quantify? I mean, I'm not saying you have to quantify, but improving the life is a qualitative thing. I mean, almost by definition.
Yes.
So when you're having an intervention, a role in this, how do you go about? What's the intellectual structure of the recommendations that you give? I mean, how will you measure whether what you have said has achieved something in 10 years' time?
Right. Well, first, absolutely right. We look for numbers, not for the sake of numbers, but because it makes discussion easier. It allows people to have a sense of where they stand today and what is it that they can achieve going forward. And it just helps you put forward your argument in a better way. And obviously, certain areas need qualitative arguments as well. So when we talk about the average citizen in Egypt, for example, well, we've done both, right? So we strived hard to quantify where we can, but then you find yourself at times, talking about things qualitatively. So by way of example, if you talk about one of the key needs of Egyptian society around affordable housing. So we look at that and try to see how meaningful that need is and what kind of shortage we're dealing with. So we come up with numbers like we're short 2.5 million affordable units in Egypt. And then we try to put a plan in place as to how we can gradually begin to fill that need. Even things like congestion, right? Which we all know that we get stuck in traffic a lot in Egypt.
Tell me about it.
So one of the tricks, management consultants do is try to look at the impact of that on GDP. So you come up with numbers, for example, that the impact of congestion in Egypt on GDP is 4%, right? Because you lose time in traffic, you deteriorate infrastructure and what have you. So there are ways to quantify even these things, but there are lots of qualitative statements.
You mentioned two. You mentioned housing. You mentioned congestion, transportation. Yeah. What are the other areas from a social point that you look at? Do you look at education? Do you look at healthcare? Are these metrics that you can get a meaningful number for?
Absolutely, yes. There's a pyramid of needs, if you will, out there that I'm sure everybody in the audience knows. Education is critical, health as well, and we've looked at these. We've looked also at things like energy security. Okay, so how can we rely more on our own resources, including obviously within that issues around energy subsidy, which is a big thing, as we all know, I'm sure was discussed yesterday.
Absolutely, yes.
We look at things like food security, right? So how can we reduce the level of imports? How can we reduce wastage? So one of the things we've looked at and recommended, and these are investment opportunities, is building crop storage facilities. If you try to track how produce, if you will, moves from a farm, down to the retail outlet, you see lots of wastage, which we quantified at more than $1 billion. And there are ways by which you can reduce wastage, one of which is to build all kinds of storage facilities. So these are some of the issues that we've looked at as well.
In the more sort of, traditional economic metrics, are you looking at those as well? Are you looking at the sort of the big numbers, the GDP, the inflation, the unemployment? Is that also part of your role?
Absolutely.
So, how do you advise a government which is facing, and they admit this, this is publicly on record, which is a great thing. There are really quite significant structural challenges.
Right.
We all know what the problem is. How is it as an external entity that you come in and say, okay, we know what the problem is. What are the solutions? What sort of solutions do you propose?
Yeah. So I think, as you said, everybody knows that there's a problem. It's important that we align with the government, which we did, in terms of what our starting point is. And it's not so much about having the exact number, but to understand directionally, okay, where we are and where we need to go. And so we do look at the basic economic indicators, right? So you need to look at GDP. You need to look at you need to look at employment. You need to look at many things. And the starting point, as you said, for Egypt has been on a somewhat negative trend over the past 3 years. And we're beginning to see
understandable reasons.
For understandable reasons, right? And we're beginning to see a bit of an uptick, as we heard from the gentleman just before me, in the stock market and in other areas as well, tourism, for example, and what have you. This is critical, right? Because the country today is exposed to kind of triple deficits, right? The growth deficit, the fiscal deficit, and an external funding deficit. And I think we know what the issues with each is. You talk about growth deficit, it very quickly bears itself on the level of unemployment, which we know is high, especially when you begin to talk about youth unemployment. When you talk about fiscal deficit, it's about budget deficits, right? And what that means in terms of domestic debt. External funding, we know that we're short on foreign reserves. So what does that mean? So all this has been looked at, quantified, to get a solid understanding of where we are today. Now, more importantly is where we're looking to go.